What's going on, you guys? My name is Zach Hartley, and in this video I'm going to break down for you the 8 different electric vehicle companies that I have on my watch list. I'm going to give you my technical and fundamental analysis, and at the end of the video I'm going to give you the 5 companies I think you should be holding in your portfolio. Here we go, let's get to it. Alright, so before we get started, I'm going to timestamp each of these companies in the description below, so if you want to skip to the end or you just want to see one of the companies, definitely head down there. You will also find a link to my free stock market course. It is hosted on Skillshare and it's completely free when you sign up for a trial. You can cancel anytime, so if you cancel before your trial ends, you got my entire course for free. There's over 8 hours of content on there, so there's definitely something that will help you out. Now let's jump right into these companies. So the 8 companies we're looking at today are Tesla, NIO, Nikola, WorkHorse Group, Hyllion, Blink Charging Company, Arcimoto Inc, and Ayro Inc. So these are 8 different electric vehicle companies. Some of them are focused on consumer plays, some of them are focused on trucking plays, and some of them are even focused on charging plays. So I'm gonna get right into it. We're first gonna go through the company financials, and then we're gonna look at the chart for each one all the way through the list, and then at the end, I'm gonna give you my 5 that I am buying and I am holding right now that I think you should hold as well. So here we go. All right, so the first company we're gonna look at is the elephant in the room. This is Tesla Motor Company. So they're currently trading at $426. They're worth almost $400 billion. So this company is larger than any other automotive company, and most of them combined as well. These guys are massive. They're the elephant in the room, and they are the leader in the industry. They have $25 billion in revenue over the trailing 12 months. That's what this is saying here. And their price to sales ratio is 15, meaning that 15 times their sales is what the company is actually worth. They also have $8.6 billion in cash, and their current ratio is 1.25. So that is assets compared to liabilities. They have more assets than they do liabilities, and that's a good sign. Now this ratio could be much higher. 1.5 or 2 would be great to see, but 1.25 is not super worrisome. It's a little concerning, but it's not overly low, especially because I think Tesla does manage their money pretty well. Now, a couple of updates on this company. They just finished Battery Day, which in my mind was actually a success. Most people thought it was pretty bad and pretty rough, and it's not going to come true for a little while, but I thought the updates from Battery Day were actually pretty good. Now, the big advantage that Tesla has compared to every other company is that they have a full vehicle lineup. What I mean by that is they make consumer vehicles, but they're also coming out with the semi-truck. They're also coming out with a supercar. They're also coming out with a $25,000 budget car. So they're going after the entire auto industry, and they're the only company on this list that really has a true full vehicle lineup for all of those different factors. And the X factor with Tesla is Elon Musk. This guy is groundbreaking. He is the god of the electric vehicle movement, and he is the guy that is leading the charge at Tesla, at SpaceX, and at several different companies right now, and you do not want to bet against him. So long term, I think Tesla is a great company. Short term, there's always going to be volatility around this company, and so you need to be able to manage that, and that's what we're seeing recently. So I'm going to move on from Tesla, but first let's look at their chart. So this is what their chart looks like, and this is why I'm saying there's volatility. They went from $504 to $335 in 5 trading days. Like, that is absolutely insane. There are very few companies that will move that drastically, but Tesla is one of them. So since then, it came up and it approached the 450 level. It bounced down, almost approaching the low that was set at the beginning of September here. And since then, it has come up to test that high again. And today we have had just a small little pullback. I'm expecting this stock to continue falling back down to 335 or break up and break through this 505 mark, and at that point I'm going to be increasing my shares in Tesla. All right, now let's move on to our next company. The next one here is NIO. Now these guys are based out of China, so sometimes getting financials out of there is a little bit tricky. Their ticker is NIO. Their current price is $21. They have a market cap of about $26 billion. So when you look at this, the second largest company on this list, by the way, I've ranked them here based on market cap. So that's what these are listed in order as market cap. So Tesla's the largest. NIO is actually second, and the second place is at $26 billion compared to 398. So that is how big of a lead Tesla actually has in this industry, and how much money how many people have put their money into Tesla. Now over the last 12 months, they've generated about $7 billion in revenue, and their price to sales is 16. And now when we look at the actual cash position of the company, they do have $973 million in cash, which is actually pretty good for the size of company that they are. However, their current ratio is even worse than Tesla. It's 1.16. So it is slightly concerning. It's not a huge concern. It's a slight concern, and I'm a little bit worried about it. Now, they are China-based, and they produced 4,700 vehicles in September, which is a pretty good number. It's about 1/10 of what we know Tesla produces in a given month, but they also have a very large patent portfolio that I think could come in handy for them as they license it out to other electric vehicle manufacturers. Now when we look at the chart of NIO, you can see here they've had a really nice run since June. It's been a pretty steady increase, and we did see two price levels that made a big impact here. So this one here, right around that $16 mark, we saw them hit this mark in July, and then it bounced down and it broke through the $16 mark all the way up to about $21.50 here in September, and it came back down, and then it used that $16 mark as support. It has now used it as support once, twice, 3 times, and it is now breaking out of the previous resistance here set at the beginning of September as well, and it looks like we could be seeing a breakout. And if this continues to run, I will also be increasing my shares in NIO. So there you go, Tesla and NIO, I like both of them. Those are the first 2 of your 5 for my stock to hold list. Okay, so the third company we're going to look at now is Nikola. Now Nikola has had quite a run over the last few weeks. They're currently trading at $24 each. They're $9.2 billion. However, they have under $1 million in revenue. They don't even have $1 million in revenue, and so price to sales ratio is absolutely ridiculous. It's like 21,000, but they do have $698 million in cash, which is a pretty large amount for their company as well. But their current ratio is 25 because they raised a lot of money from investors. Now just recently, the CEO has resigned, and they have faced a ton of class action lawsuits for lying to investors. They actually ran an advertisement where a truck looked like it was driving down the road, but in reality, they towed the truck to the top of a hill and sent it down the road by its own weight and gravity and recorded it as a commercial, and now they are facing a ton of lawsuits for it. And the other thing that I want to point out is they are trying to silence YouTubers like Tom Nash. So this guy runs a channel here on YouTube. He does a phenomenal job of calling out people that are lying to everybody else and lying to investors. He has done some research on Nikola, and he has shown that they are lying about several different things, and they're now trying to silence him. So Tom, I support you, man. I think you're doing a great job, and I think you really called out some of the crap that they are portraying to investors. So I am not an investor in Nikola, and when you look at the stock chart, you can see it's not very good. So they came out here at the beginning of June. They hit a high of, crazy enough, $93, and then all the way since then, they're now trading at like $24. They had a massive push up by like 25% yesterday, and they're still only at $24, $25 from a high of 93. So I recommend staying away from this company. Do not touch them with a 10-foot pole. Do not put any of your money into them because they are absolutely terrible. Now the fourth company that I want to talk about is WorkHorse Group. So these guys are trading at about $23 right now. They're worth $2.5 billion. They have $376,000 in revenue. Now that is extremely, extremely low revenue numbers. However, they just delivered their first vehicles. This just happened in the last few months where they pushed out their first vehicles. So unfortunately, this number doesn't really represent a whole lot, and neither does the price to sales ratio because they just started delivering their vehicles. But I do like the market that they're going after. So they're going after medium duty vehicles focused on last mile delivery. So they are out there to replace all of the FedEx and UPS trucks that you see out on the road. They're those big square vans. These guys want to come out with a better electric van that is going to help these companies reduce their costs, improve their efficiency, and get the packages out faster. They're planning to deliver 300 to 400 vehicles in 2020, and I'm expecting 1,000 to 2,000 at least in 2021 at an absolute minimum, and they just delivered their first vehicles, so I do like them. Now let's look at their stock chart. So as you can see, they were trading around $1 or $2 for a very long time, and then June came around and they absolutely skyrocketed up to about $22. They came back down to about $12, $14 where they found some support, and then they slowly found more and more momentum all the way up to $31. Since then, they came crashing back down to where we saw previous resistance. They now use it as support. It has bounced in between this descending triangle, and I am expecting it to break down below 22 or bounce off of 22 upwards and set new highs above 31. So that is my expectation for WorkHorse right now. I do not see a trading opportunity in it right away. However, I do like the company long term. Okay, so the next company here is Hyllion. Now these guys are a little bit more complicated and technically you can't even buy the shares right now. Right now they are a private company. However, they're in the process of buying a shell company that is public. And when they do that, they will change the ticker to become HYLN. And then at that point, Hyllion will be a publicly traded company that you can invest in. So as of right now, they're a private company. However, in the next week or two, I believe, they will become a public company by purchasing the shell company and then changing the ticker to HYLN. So as of right now, the numbers don't mean a whole lot to us. Their current price is $45 and their market cap's $1.3 billion. However, these numbers are going to change drastically over the next little while. But the updates for them is really interesting. So they make Class 8 trucks. So therefore, they're trying to compete directly with Tesla semi-truck. And even in their investor presentations, all of their stats for cargo, efficiency, cost of ownership, everything on there is comparison to Tesla, and their investor presentation makes their truck look very good in comparison to the Tesla semi-truck. So honestly, I don't know enough about truck specs and what's valuable and what's not. So what will have to happen is both these trucks are going to go on the road, and I'm sure there's going to be a direct comparison of them to see which one's better for which applications. And the middle point here is that they are merging with the shell company sometime in the next week or so, so we should find out more about that coming up here. So I don't have a stock chart for them because most of the charts out there are for the shell company, and that's not really going to give us a whole lot of information. So that is Hyllion. Keep your eye on it over the next little while. I think it could be a big name in the industry. Okay, now the sixth company here is actually my favorite. After doing all of this research here, I think these guys actually have the best business model out of anybody else. So it's called Blink Charging Company. BLNK is the ticker. 1088 is the cost right now. They're worth $343 million. So they are a very small company. They're not even a $1 billion company yet. They're extremely small. They only have $4 million in revenue, and their price to sales right now is 78. So it is a little bit high. You could make the justification that they're overvalued. However, their revenue is growing extremely fast. So let me point out a couple of things. They have $3.8 million in the bank, and they have 1.6 ratio, meaning they're pretty safe there. What they do is they make electric vehicle charging stations. So if you own a building or you own a business and you want to put a charger at your business or at your building or at your location, these guys will come and do it for you. And the nice thing here is they're going to sell you the hardware, they're going to sell you the service of installation, they're going to take a fee of all of the energy that actually gets sold from that meter, and they're going to take a processing fee on the transaction that actually happens there. So they're making money in 4 different ways just from the electric vehicle revolution, and it is something that everybody is going to need. If you go on a road trip, if you drive to another city, if you drive very far, if you forget to charge your car, all of these little charging stations are going to come in very handy, and these guys are going to be able to generate consistent, ongoing, reoccurring revenue, and that is the best business model you can possibly get, because none of these other companies are going to be able to generate recurring revenue like Blink Charging will, and that's why I like their business model the best out of every company on this list. Now, their financials are also absolutely phenomenal. So they have 180,000 members on their Blink Charging membership right now that are actually paying to be able to use their charging stations, and not only that, but their revenue has doubled in the last 2 quarters. So they went from about $750,000 in revenue to over $1.5 million in revenue in 1 quarter, and that only took 2 quarters for them to see that growth. So that is absolutely phenomenal. You very rarely see growth like that, but because of this industry and because of how well they're positioned, I think they have a great opportunity coming up. Now, as you can see from this chart, they've had an amazing run from about $1 up to about $13. They came crashing back down to about $5, and since then it's starting to make its way up to this $13 level again. Now, my expectation is that it's going to break through the $13 level. However, I do expect some resistance here, and it could come all the way back down to the 5 or 6. However, I would expect it to stop around 8 or 9 if we do see that pullback. What I'm going to be waiting for is the breakout of this $12 or $13 mark. Okay, now our 7th company here is Arcimoto. Their ticker symbol is FUV. They're worth $6.22 per share, or $196 million for the company. They've got $1.8 million in revenue, which is not very high compared to the actual value of the company. So that's where you can see that their price to sales ratio is 104, which is not a good sign for this company. However, they do have $7 million of cash in the bank, and their current ratio is phenomenal at 4.91, meaning there's no risk of this company going out of business. Now, they do make a very unique product, which is a small 2-seater tricycle. In my mind, this is not going to be meant for delivering bundles of packages, but it is going to be perfect for delivering your food through Skip the Dishes or Uber Eats or Grab, or delivering a small parcel from one place to another, or rush courier deliveries, things like that. These guys are going to do great at, and these guys are going to be phenomenal because it's safer than a scooter, it's probably more reliable, and it's a little bit better, but it still has the advantages of being so small. Like I said, I think they have a big opportunity for food delivery, but they did have a terrible last quarter. I think their revenue went from about 600,000 to 200,000. It was not very impressive at all, and it was not a good quarter for them. So it's a little bit disappointing to see that they can't accelerate that revenue over time. Now, when we look at their stock chart, you can see a little bit of a representation of that. They did have a nice run up from about $1 to $8 here at the beginning of July. However, since then and that quarter came out, they have been trading pretty sideways in a channel here, and they're currently at about $6.23. So what I'll be looking for is a breakdown of the 5 level or a break up of this trend line. And if it breaks up, I think there could be a buying opportunity there. All right, you guys, so the last company on the list is Ayro Inc. Now, these guys are extremely small. Their current price is only $278 per share, or $67 million for the company. Their revenue over the trailing 12 months was $285,000, and their price to sales is 80. However, they have $7.9 million in cash in the bank, and their current ratio is the best on this entire list, coming in at 5.76. So they have a great current ratio, meaning they have lots of money compared to the debt they have. Now, the business model for these guys is completely light-duty vehicles, so a little bit bigger than Arcimoto, but much smaller than WorkHorse. So the idea here is if you need a transporter for your college campus because you need to get people from one side to the other, or you need an airport vehicle, or you need a little wagon for your stable, these guys are making those products. So they're small, compact, light-duty utility vehicles that are designed for gardening, for transporting people, for small package delivery, and for basically anything that a car or a truck would be too big for. Now, they do have a very unique focus going after that market. However, they do have declining revenue. They have been around for a couple of years, and over those years, that revenue has been declining, especially quarter over quarter. And so for that reason, I had to bring it up to you because I think that is a red flag and not a good sign from this company. And on that note, we have now wrapped up our 8-company analysis of the electric vehicle market. And so without any further ado, let's unveil the 5 companies that I think you should own if you haven't been able to piece it together already. So the first one is Tesla. I think this is the industry leader. You've got Elon Musk on your side, and long term, this stock is going to go up. Short term, it could do anything, and on a 1-week basis, it could do anything as well. But over the long term, this stock is only going to go up because Elon Musk is a man on a mission, and so far he has ticked every box he said he was going to. Secondly is NIO. I like NIO. They're in the largest market in the world, and they're experts at manufacturing, so I think a lot of things would have to go wrong for them not to be successful in this market. I like Tesla and I like NIO as your consumer plays. After that, I like WorkHorse and I like Hyllion as the commercial plays. WorkHorse is going after the medium duty trucks, which Tesla isn't even touching right now, and neither is anybody else as far as I can tell, so I absolutely love that. And Hyllion is putting out claims that their truck is even better than Tesla on a variety of different rankings, and so I want to see that actually come to fruition, and if it is, I think they have an excellent opportunity in the market. However, my number one buy from this entire analysis and all of this research and all of these charts is Blink Charging. I absolutely love this company's model. I love everything they do, and their revenue is increasing dramatically. You can also get in early days. Their company's not worth very much right now. The stock is cheap. You can buy a lot of shares, and I think they're going to have exponential growth over the next 20-30 years. I think this could be a company that becomes the major player in the future of what a gas station was, which is now electric charging, and I think these guys have the best business model, and I think they're well prepared and well set to take advantage of it. So that is my full analysis. That is my list of the 5 companies you should own. If you guys got any value out of this video, please consider liking and subscribing. It takes a lot of work to put all this data together for you, but I sincerely appreciate you watching, and if you are interested, I have a ton of links below for free resources to improve your trading, so please consider taking a look, and I will see you guys in the next video. Here we go.